In a constantly moving and evolving world, the auto industry stands as a titan, driving not just our vehicles, but our economies and innovations forward. But what happens when the wheels wobble and the foundation begins to crack? Stick around until the end because we have some exclusive information that might change how you look at your next car purchase. In months, the U.S. auto market changed to a lower gear. Some analysts now expect that an excess of automobiles will trigger a pricing war that would drive prices precipitously downward, even though average car prices reached record highs last summer. According to a recent UBS research, global auto production will likely outpace sales this year by 6%, creating an excess of 5 million vehicles. Automakers are gearing up for a pricing war, and some electric vehicle manufacturers are already lowering costs, even if those price reductions might not occur until the second half of 2023. The report said, given the bullish production schedules, we can see a high risk of overproduction and growing pricing pressure as a result. The pricing battle has already begun in the EV space, and in the second half of 2023, we anticipate it to spread to the combustion engine category as well. Moreover, the researchers predicted that luxury car makers would fare better than family car manufacturers in the event of price cutbacks. According to Yahoo Finance, the combination of rising energy costs and expensive pricing that are out of reach for many consumers might significantly negatively impact EV manufacturers. The automotive giant Tesla had cut the cost of its vehicles by £8,000 in the UK in January. Moreover, some of its more affordable versions are currently in the same price range as popular names like Kia. According to the website of Proactive Investors, Ford Motor Company and Lucid are two more automakers who have responded to Tesla's pricing decreases by cutting their EV costs. There is proof that auto prices have already decreased across all segments. Additionally, according to the most recent Cox Automotive data, which was made public on April 7th, wholesale used vehicle prices decreased 2.4% from a year earlier in March, but increased 1.5% from the month before. According to a Kelley Blue Book survey dated March 23rd, new vehicle prices have fallen for 3 consecutive months, and it's starting to look like a sustained trend. Prices are, however, still historically high. Has the COVID-19 pandemic had an impact on the car market? Of course it has. The global pandemic that broke out at the start of 2020 has profoundly altered the planet. Demand caused a significant deal of products to become scarce, making them increasingly difficult to find or expensive and affecting the auto industry. It's critical to comprehend why that is. However, there are many causes, but the chip shortage was the main one since it stopped the production of new automobiles, which in turn drove up the price of used cars. Naturally, the COVID-19 outbreak was the cause of this chip scarcity, and the subsequent Russian invasion of Ukraine hasn't made things any better. Even so, time is a great healer. These difficulties won't last forever, and certain life facets have improved with relief. Not that the world hasn't recovered, but perhaps some solace is on the horizon. Understanding the underlying factors that led to this surge in the car industry will let us monitor changes within and forecast a positive change for potential purchasers. Orders to shelter in place were common because of the viral outbreak. Simply put, people weren't traveling around as much, so they didn't need cars. Moreover, a larger number of people were working from home or weren't even working. Unlike the Great Recession from 2007 to 2009, high petrol prices and credit lending troubles weren't a problem. Nevertheless, between March 15th and April 4th of 2020, 16.8 million new unemployment applications were made. Selling automobiles was difficult due to the lack of desire to travel around with millions of unemployed people. Additionally, dealerships were providing 0% interest loans for 84 months, which is certainly an astronomical time, but these conditions were required to close deals. However, with all the uncertain factors at play, purchasing a car did not seem to be a top priority. Despite the cheap petrol prices being less than $1 per gallon, one would undoubtedly need to have the means. All this led to dealer stock, or days supply, exceeding 90 days, where the typical value is in the low 60s. One would assume that sales would be unaffected by having such goods in a dealer's control, but it is evident that the special conditions brought by the epidemic were significant and made complicated difficulties. Of course, as limitations went down and regular business resumed in 2021, things started to calm down. The fact that life had to go on regardless of whether anything could happen added fuel. Hence, the used and new automobile market surged in price that year. So, if you didn't get your hands on a car by probably the first quarter of the year, you might have to say goodbye to the opportunity. However, the shortage of superconducting chips produced problems with new cars, which led to a domino effect of increased demand for old cars. Additionally, people were still in shock from their jobs, which further hampered the creation of new cars. Later, Russia invaded Ukraine at the start of 2022. Undoubtedly, there are major and long-lasting repercussions among the tragedies that followed. So this battle has put a strain on wiring harnesses made in Ukraine, which has, in turn, affected European production. As a result, European automakers can distribute fewer vehicles to the United States. Although the global epidemic, the ensuing chip scarcity, and the war in Ukraine may be transient events, they have all had a long-lasting impact on car buying. Several changes occurred in 2 years. Used car prices increased by more than 40% yearly, while new car prices increased by more than 12.2% in January 2022. According to Edmunds, 82% of new car buyers in January 2022 overpaid the sticker price, comparing that to just 2.8% the year before. When will these skyrocketing car prices halt and return to what they were in 2020, or even before the epidemic when consumer discounts were scorching hot? So what can we expect for the future of the auto industry? Are you bullish on them and ready to invest in automotive stocks in 2023? Anyway, share your thoughts in the comments. When supply and demand are balanced, which might happen in late 2023 or early 2024, automakers can create enough cars to meet new car claims. Moreover, volatility in transaction costs is projected to level off. However, the pandemic has significantly altered dealership strategy. Pulling incentives and lowering inventory were two opportunities provided by COVID to get lean and mean. Furthermore, car makers and dealers eventually realized that less inventory made it more profitable. The significant changes in dealership models most likely indicate that previous discounts and incentives won't be reinstated. Additionally, manufacturers will maintain a balance between inventory and sales demand to keep prices high. Thus, the levels of 2019 may never be attained again. Moreover, the supply of second-hand goods will likely be scarce for the next 3 to 5 years, and prices will continue to rise. Hence, as all things considered, it appears that the supply of new cars will be low long into 2024. So it might take years for car prices to reach the pre-COVID levels. The average new car price is still over $48,000 despite a recent decline of only 1.1%. Moreover, the average cost of a new car is now below sticker price for the first time in 20 months. The average cost increased for over 2 years due to dealer markups. Incentives have returned in 2023 as the number of new vehicles increases. Hence, dealers cannot demand the same higher prices as before since more vehicles are on the lots, which increases competition. Hence, it is anticipated that a new car's average price could reach $50,000 this year. Overall, a significant decline in the auto sector is getting closer. Even though COVID is still around and the conflict in Ukraine has been going on for more than a year, the availability of vehicles is gradually improving. One would advise placing an order immediately to have your preferred setup in due course. However, when unpredictable, volatile outside variables continue. We now see the warning indications of a declining car market value. Hence, the best course of action would be to stay put and wait out the storm. Thank you all for tuning in to this deep dive into the impending collapse of the big auto market. We must be informed about these economic shifts, which directly impact our daily lives and decisions. But remember, with every downturn, there's a potential for resurgence, innovation, and new opportunities. And before we wrap up, if you found value in today's video, please hit that like button and share your thoughts on this topic in the comments below. Are you concerned about the future of the auto market? Or do you see a silver lining? We'd love to hear from you. And if you haven't already, consider subscribing to our channel to stay updated on more insightful content like this. Until next time, stay informed and stay safe.